Cotton futures prices ended last week on the rise. The December contract trading more than $3 higher, topping the $95 per hundred mark. Now the contract rising for 4 straight days, driven by a weaker dollar and strong weekly U.S. export sales. John Payne, the author of This Week in Grains, joins us today. John, let's talk about something we haven't discussed in a little bit, and that's the cotton market. Obviously, we've been watching to see how the crop fares through the production portion of the year, plus now we've got hurricanes. How do we sit as far as setting up for harvest and moving into 2022?
Well, the USDA numbers that we've got in the last couple of Aussies have increased. So we went from a kind of a deficit year on an average crop. Now we're going to have supply excess. So we'll add a little bit of a carryover number. It's still going to be somewhat tight compared to where it was a couple of years ago. But at this point in time, just watching the trade for the last couple of days, as I'm talking to you, we're above 90 cents again. It's been very, very correlated to the equity trade, meaning go up and look and see where the Nasdaq's trading. I'll bet you cotton's somewhere close as far as a percentage basis up or down. So I think you've seen a little bit of a macro spillover here. That's where the Asian exposure has to cotton prices do matter. But I think where we are, especially in new crop, looking at 80 cents for next year, that price is probably not enough to pull acreage away from something like milo or corn or even planting wheat, full season wheat over the cotton markets here this year. I just don't think there's a whole lot of downside when we get through, say, 85, 84 cents. But if you're looking fundamentally, the crop looks great. And if you're betting on China spill over here into the U.S. equities market, cotton doesn't seem to be a bad way to play it.
Yeah. As we talk about next year and production from this year, you mentioned a little bit of a carryover. So at this point, 80 cents isn't enough to incentivize more acres next year, or is it? Because 80 cents traditionally has been pretty decent.
Oh, yeah. I mean, it's $5 corn to a certain degree,
right?
But it costs a lot of money to put a cotton crop in. And you need a lot of luck to do it. And I think in the areas that, we follow, West Texas specifically, they've had a great year. I mean, it's been as ideal as I can remember in the 10 years I've been following the market. So if we can get through the final couple of weeks here, harvest usually kicks in maybe late October. I think you could be staring on the pipe of a pretty good crop. And again, I think Asian markets matter here. And if you see some spillover with China, cotton could tumble. At least that's the correlation we've seen in the last couple of days.
All right. Appreciate that, John. Thank you so much for being here and joining us this week for analysis. We'll be back with more Ag Day coming up in just a little bit.
To find John's newsletter, This Week in Grain and Oilseeds, head over to www.thisweekingrain.com.